Welcome aboard. Thanks for joining me for Trading Buddies Monday edition on the 26th day of June. Not long to go and June will be no more. I've got a sneaking suspicion that means something in Australia because it's actually the end of the financial year here in 4 days from now, which is an interesting concept actually as far as markets are concerned. And we might have a little chat about that later in the show. We'll see. First up, of course, let's go and check out the gold charts and see what's going down there. If I can find it. There we go. Rightio. Hopefully you can now see, yes, you can see the gold chart. I'll just check that everything is going in YouTube. And I can't see it yet. It takes ages to get to YouTube for some reason. I'll check it again in a minute. All right, let's talk gold. And the gold high of the range is currently there. Low of the range is currently being printed. And I don't really like it when that's the case, but what can you do? Can't tell them to stop. Daily pivot might have something to say about that, and you can see the weekly there, and it looks like a sandwich, a pivot sandwich at the moment. Not ideal to trade, not ideal at all yet. Smashed on Thursday, smashed on Friday. Doesn't really matter, does it? According to these, but then it mattered, and then it mattered. So yeah, it does make a difference. All right, we'll wait for the candle to close, of course, and we will consider our options. The entry for the buy would be at 1928.55 or something. Yep. And currently, the short is 1922, let's say 0.10. Actually, if this were to pull back into here, I would prefer the short over the long. Bias, yeah, looks still short gold, and a nice little pullback rejection there on Friday by the looks of things. It's going down, but it's going down in a manner that's very, very difficult to catch. That candle there is interesting, but I'd like to see it sitting up here rather than at the bottom of 1, 2, 3, 4, 5 days of selling. Don't like that too much. Anyway, we'll see how we go. We've got about nearly 2 minutes left. I'll just quickly run through last week and how that gold trade went. Where are we? Friday, Thursday, Wednesday, Tuesday, Monday. Monday, we decided not to take the trade because of exactly what we're faced with today. And that was the pivot sandwich. A little bit different, however, because there was the low of the range at the time. There was the high of the range. So you're trading into the pivots on both up and down, or both long and short. That makes it a bit more difficult. Had we traded it, I'm not sure the long would have triggered or been very, 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 very close. If you had traded it, maybe you got in the long and smashed. Tuesday, there's the high, there's the low. Would have been taken into the long. Oh, hang on, is that right? 9 o'clock bar. Yes, you would have been taken into the long, and unless you got some profit in the bank, you would have been absolutely hammered with that one. Wednesday, good winner there by the look of it. Thursday was another good winner to the downside. Friday, good winner to the upside. So 1, 2, 3, question, and didn't trade. So yeah, not a bad week. Righto, getting ready. We have new candles, not quite. Got 3 orders that I've placed this morning. I'll share them with you in a minute. Neither has triggered yet, to the best of my knowledge. Okay, pull back. Right, we'll set the buy order. And like I said, the break of the range will be at 1928.55, let's say. 1928.55. Stop loss and the entry for the short will be at 192210. 1922.10. And the profit on that one will be taken at, I reckon DR1 looks the target, doesn't it? Weekly pivot doesn't exist, right? We'll just put an eraser across that. DR1, $6.50 versus a risk of about the same. So it's about a 1-to-1. That'll be our target, which is at 1935.37. 1935.37. There you go. That's the buy. The sell will be the reverse of that, of course. And I want to sell by market. I want to sell as a stop. Entry level. Can anyone remember? I didn't have a look at how much money I put on that. Maybe I better do that. 1922.10. That's it. 1922.10 is the entry. Stop loss is 1928.55. And the profit for the short, we might even be able to be a bit liberal here. There's DS1. We'll use the low, which is 1910.10. 1910.10. There we go. There's the short. Let's get short. Looks like a far better result. Righto. Now, I mentioned that I had 3 orders in the market. 2 of them on the weeklies. I think 2 of them on the weeklies. First of them is Euro versus the Swissy. We've been triggered pound CAD. Okay, we'll have a look at that in a tick. Let's get rid of all that. Let's start there then. Pound CAD, where is it? Doesn't exist. Must be hiding in here somewhere, I suspect. All symbols, pound CAD. There we go. So I can actually see my screen. Right, the weekly is suggesting that trading on the daily. What am I trading? Pound CAD. Did I just guess? I don't think so. So we've been triggered short. Oh, yeah. Okay, I've got it. Trading a false break. Ain't perfect, but there it is. So we're broken above the resistance trade line. We've had a rejection off the monthly pivot. We've had a run down, not ideal, I've got to say, after those 2 seller bars to get in at that point, but it does fit the criteria of a false break. And further than that, we have also got a horizontal level through here. That's exactly the same. So broken above the horizontal level, come back below it and retest it with a rejection bar. I'm after a quick TP1 because I'm not that happy with the setup. So we're going to take TP1 here. I'll give you the levels, shall I? They should be on a chart somewhere. Yet they aren't. That kind of peeves me off. Entry level is at 1.6736 and the stop loss is at 1.6835. And first take profit is at 1.6691. If you're interested in following that one, that's pound versus the CAD. Euro versus the Swissy, as I mentioned, is on the weekly chart. Hard thing to catch this, Euro versus the Swissy. But I've got to say, I can't find a reason not to trade this. It just looks to me as though we've got a key reversal bar, or game changer bar, as I call them, that is in perfect concert with the trend, which is clearly down. Momentum has looked like rolling over. Weekly chart has delivered a clear rejection bar off this horizontal level, former resistance, former support, former resistance. Didn't quite make it, but I think the most important part for me is that we've got an entry underneath the monthly pivot, which has been broken and retested. So again, game changer bar to the downside. Weekly, that's what we're trading at the end of the day. That's the setup. And I do like the position. In fact, like I said, to me, it's a no-brainer trade. Whether that means it's too good to be true or not is another story. Taking profit here at that low entry level on this one. I've got no idea why I'm not seeing these entry levels, because I put them on my chart earlier. Maybe it's on there. There it is. Happy days. Entry level for this one, 0.97489. Now, the reason these have got points or fractions of a pip is because when you use the market scanner, it just does what it does and doesn't give me an exact entry. Well, it does give me an exact entry. That's the problem. Rather than rounding it up to the nearest pip, that's the entry, 0.97489. Stop loss is at 0.98524. And my first take profit is at 0.97089. I'm only going to remove 1/3 of the position at that point. Why? Because we're actually trading a game changer bar. Now, the game changer bar, as always, has to be after a rally. The rally ain't that great, I've got to say. And that's if there's a question mark on this one, that's probably it. But it'll do. It is a rally, and it fits every other criteria. The third and final position that I entered this morning, I can't see. It's not dollar CAD, euros, pound CAD. We've covered that, haven't we? It's pound Swissy. Righto, let's go to pound Swissy. Pound Swissy is simply a break and retest of this trade line here. Now, to put that into context, it's a potential reversal trade. Now, as always, with potential reversal trades, I need to see a reversal pattern. Well, that qualifies as a big bullish engulfing bar. Have we got a higher low? Holy macaroni. We've got about 17,000 higher lows here. And we've gone into a range since we got the 17,000th higher low. And we've broken out of that range with this bar. So to me, this is binary. It's either going to be a false break or it's going to be a breakout. If it's a breakout, then the breakout needs to be profit taken just about here somewhere. So that's what we're playing here. Up, back, A, B, C. Pretty simple. If it is a reversal, this has got massive potential. With a few stops to be had, of course, one round about this level. And then if you go a bit further out, it can go as far as it possibly can. Whether it will or not, of course, another story. It's tried this before off this double bottom, and I spoke about this with the Euro Swissy, with just about everything versus the Swissy, because they were at all-time lows. And now we've got that third push down after, the first push after the double bottom. That's normally not a bad signal that price can rally. Why? Because there's a big liquidity grab down here. That's why. So they're the three positions: pound Swissy, Euro Swissy, and pound CAD. Somewhat non-complementary, if you like, even hedge-like in some cases. But that's okay. I think they're both individual, that all three are individual, so they can go as far as they possibly like, and if they do go as far as I possibly like, we'll be in the money. I've got two more on my watch list. Euro versus the Aussie is the first of those. and with the euro versus the Aussie, I've got, well, if we go to weekly or even the daily chart, probably is the best to show it. Got maybe I can pinch that one. No, I can't. It's not a channel. Or is it? No, it's not. There's a clear channel being printed here. So that's my structure about there somewhere. And the reason I've got this on the watch list is pretty much for that reason. A bit of a resistance level through here. There's been support as well. And we're now at the top of that range. So if I were to see a false break of that trade line, I would look to trade this short euro versus the Aussie. Aussie had a shocking week last week, in particular on Friday. And as you can clearly see there, euro versus the Aussie benefited on the back of that. Not sure what that's about. I'm sure Ash will update us with seasonals and COTs and maybe even some fundamentals around that Aussie as well. But I'm of the opinion if this comes back below that level, that it will be a sell. And the last of them, somewhat against my grain, I've got to say, because I think the dollar's probably got a little bit more left in it. Yet that said, I can see this scenario, which looks very much like a false break of that level and the horizontal level, which has clearly got a little bit of form through here as well. Bit of a channel sitting there, bit of a inverted head and shoulders that really hasn't played out. But I don't mind that false break scenario, and you can see it clearly on that weekly chart. So that's on my watch list. Why haven't I traded it already is the question. Well, I've traded 3 others, so I got sick of putting trades on this morning, I think. That's not the real reason, but this is a clear false break. Really is a clear false break. Maybe I should put an order on that. There is, of course, you're trading into resistance, which has got a little bit of horizontal form there as well. So that's the only thing against that, apart from the fact that you're trading counter trend, of course. But 125, yeah, there's not a whole lot in it. But definitely on my watch list, I'm keeping my eye on it. If I get a better opportunity to trade it, then I shall, maybe as a false break of support. Down here, back above, retest, or resistance, up, back, like that. Keeping my eye on both of those, Euro, Aussie, and Kiwi versus the dollar. Quick look at the dollar index tells us that we're midstream. I've really got no directional bias on the dollar at the moment from a technical point of view, because we are in between all of this support and resistance. I've got support underneath and we've got resistance above me. And really, I don't know what happens next, to be fair. Maybe that's best tacked from a fundamental viewpoint. And who better to tell us about all of that than my trading buddy, Ash. G'day, mate.
Oh, hi, mate. How are you?
Oh, look, having a ball.
I was just sitting here thinking about the gold trade, actually.
Yep.
I think we should. How long have you been trading that one?
Oh, we're into about the 3rd, 4th month, I think.
Brilliant. I think we should have a little bit of a drill down and see how good it is and if we can improve it.
Okay.
So,
when do we want to do that?
Well, you and I can get together, mate. All I need is the all I need is the trades. I mean, if you can send me either an Excel spreadsheet with them on, just pull them or just pull them out of your monthly. You know how to pull out the monthly accounts just so they print.
Yep.
Then we can have a really good look. What I might, because I think what we firstly want to know, obviously, is the trade profitable. But then secondly, is there a way we can tweak it with some sort of, some sort of trend filter? You know, is there a trend filter that we can add to it so it actually goes in a specific direction? And only trade in that particular direction. So we can try that. And then the last thing that we can probably just test out is is whether the take profit area is the best take profit area, because this, well, is it a 1-to-1 at the minute?
It depends. I'm using support and resistance
Right.
as exit points, right?
Got it. Makes a lot of sense. There's no question. We might be able to put a figure on it just to get a kind of round number, to make it just more mathematical.
Well, same as we did with the last time we had a look at those, and we decided that the sweet spot was around about 2.5 to 1. Not sure that's the case with this, but that's the way to do it. We'll do it that way.
Yeah, we can test it out, mate. I'm a bit better equipped than I was last time to really dive into these numbers. So yeah, we'll get together, mate. I don't know. We'll figure out a time, but now you've got 3 months of data. That's plenty.
Yeah. Cool. Daryl, pound Aussie. He wants to have a look at pound Aussie. I didn't do that, did I? And Philip, today you're doing short Kiwi Swissy, long pound Kiwi, short gold euro, and short oil. Interesting. Do you want to have a chat about those, Philip, at some stage? If so, that'd be great. Otherwise, we can have a look at the charts and a bit of a note.
Would be good. Philip, yeah. Do you know what? That you're right, mate. It'd be good to get someone on. Philip, if you want to come on mic and show us your charts, or come on mic and we'll do the charts. That'd be really cool, because actually you've got a lot more trade ideas than I have today. Because and it'd be interesting to know why you're going for euro gold short. I'll give you some of the data in a moment. After we've sort of seen if Phil wants to come on. But otherwise, mate, run them down and we'll have a look and see what we got and see if we can figure something out. And I'll give you some background stuff.
I'm outside, so I couldn't share the charts, but I can talk about it. Awesome. We can share the charts while you talk about it, mate. Yeah, for sure. Aussie sounded dovish on their monetary policy minutes, which they said they were thinking of pausing before deciding on the hikes that would cause their action for the market. Okay, thanks. I wasn't up to date with that one. Didn't have a look at it. As far as pound Aussie is concerned, and this is for Daryl, do I want to give my opinion on it? Yes, I certainly will. There are 4 letters that spring immediately to mind, and they don't begin with F, no. NLNS is when I look at that chart. And what that means is no long, no short. No long because we are where we are. We're trading at a heightened level, if you like. No short because I don't have any form of reversal pattern to go by. So to my mind, I have to wait till it hits that level and rejects it, all goes through it. Or if it were a reversal pattern, which it isn't, I would then wait for a lower high. So I've got nothing there on pound Aussie, I'm afraid, off that chart.
Yeah. Do you know, mate, mine would be a no long, no short as well. And I'll tell you, my reasons are slightly different. The first thing is the same as yours. I think the valuations up here are too risky to try and go long. In fact, not only are the valuations too risky, but if you consider where it's come from, the very, very low of this particular move, it's been far too steep for my particular liking.
Mm-hmm.
You see sort of the last time it rallied, the steep rally that we saw last time, that one eventually reversed. Another steep rally came next, eventually reversed. Then it tanked steep. It eventually reversed. And look at the way it's kind of is moving as well. It's so emotive. I mean, I suppose that the counter arguments of that is when it came off its lows, but they are, particular lows as well. So that would be the first thing. I think ultimately it's probably got a little bit more to run to the upside. And the reason that I'd go long rather than short comes down to the fundamentals. Whoever mentioned about the RBA with their dovish statement, that has affected. Yeah, Philip, I mean, you're absolutely right. It has affected the valuations of the Aussie. And then you couple in the fact that China are reducing interest rates. So everybody else is kind of pumping interest rates. China are reducing interest rates, telling you that the Chinese economy is suffering, and they're trying to add some stimulus. That's not good for the Australian dollar. Then we get on the flip end, the flip side of that, we get the Bank of England, who of course have got an economic situation which is poor. However, they are raising interest rates because they have to, because the CPI data continues to be bludgeoning. You know, it's way too big, way too high, and it's not coming down. So central bank differences alone suggest that you can't really short the pound with any confidence right now. Yes, it should come off a little bit, no question, but it's a very difficult currency to go short on, because there are going to be bulls that continue to buy this up because of the situation that the Bank of England are in. They raised 0.5% last time out, which was a surprise. Most of the other central banks either paused in the case of the dollar, or they raised just a little bit. You know, they're edging forward slowly, suggesting they're coming to the end of their cycle. Well, the Bank of England aren't saying the same thing, so that makes the pound an impossible short in my particular stance. I can't take that, but I agree about the valuations. But I think if you went to a monthly chart and you put on a trend line on the monthly chart, it would suggest that there probably is just a little bit further to go. If you take the very, very high back in 2014 and then come down to 2000, the high end, yeah, coming down there, looks like there's a little bit more room, you know, to go. And it wouldn't surprise me to see us try and at least attempt to push into that area. But of course, we are on significant resistance right now because of that horizontal level, which makes it very difficult, you know. And that's why it would be a no long, no short for me as well, mate. I'm with you. You know, I think the long is the most sensible when it comes down to the fundamental swing. The short is the most sensible when it comes down to the price point. And that's why I just wouldn't touch it.
Well, here's an idea to make it tradable for you and me. I'm sure if we were to get this to pull back to here,
yeah,
becomes a different story.
It does.
Then you can trade it on.
Yes, yeah, you could. The only problem with that, of course, is that
It's
being on a monthly chart, it's going to take a while, and the fundamental picture might well have changed by then. So, you know, as we stand today, the pound for me is just impossible to go short on, which makes lots of things difficult, because I like the CAD yen long, but you look at the CAD yen and where that currently sits. You know, when I look at the sort of fundamentals and the seasonal data and the COT data. Is this the CAD yen? No, yeah, there's the CAD yen. Yeah. Same thing. Yeah, same thing. Look at that. How can you trade that long? But the fundamental landscape suggests that we shouldn't be going anything but long on the CAD and anything but short on the yen. So very, very difficult to kind of make a decision when you're in these kind of areas. And all it's going to take, this is the issue. The current situation suggests you should go long CAD yen. But the valuation suggests that all it's going to take is a little flick of the finger in favor of the yen, and this thing just turns around and goes in the opposite direction very, very quickly. We've got CPI data this week from Canada. That might be a catalyst, so that could turn it around hyper quick. We got CPI data actually from Japan as well. But you know, the how can you go long the yen? It's just it's a terrible currency.
You've got to have a massively big heart and massively deep pockets. If you've been buying yen for the last God knows how long, I'm seriously surprised if you've still got money in your account.
Yeah, the only thing is we are seeing this global weakness, and global weakness suggests money coming out of the Australian dollar, out of the New Zealand dollar, out of the Canadian dollar, into the Swissy and into the yen. So that's the caveat. But it's kind of, you know, at this stage, it's more of a predictive signal rather than a signal that we're seeing in the present time, because we are seeing global weakness, but it hasn't really picked up the pace. I mean, they're still talking about a soft landing for the United States when it comes down to recession, and it's a head-scratching situation, because you normally the central bank would raise interest rates and CPI data would start to take some kind of effect, and I suppose in some respects it has, but in many respects it hasn't. So and the other thing that would normally happen is that the jobs market would be negatively affected, because you would see companies have a much tighter financial situation, and workers would be laid off, which would again cause that inflation data to come down, the inflation to come down a little bit. But again, we haven't seen that, so
No.
we're almost in unknown territory here. And when we look through historical data to try and get something similar, it's very difficult to get anything to fit. You know, COVID, I think because it's happened in such a short period of time, this thing, you know, we had literally, we just had COVID, hyperinflation, and central banks aggressively raising interest rates at the fastest pace in history. It's just a tough environment, and you're really waiting for volatility to start to decrease, so you can look at those longer term timeframes. Even though when you look at this long term time frame, of course, that the CAD yen would have been an amazing trade if you could have got into that early doors.
And there's a bit of that, you know, if you look at dollar yen over time, you'd be doing okay if you were trading that.
Yeah. Big
retracement, of course.
Yeah.
At the end of last year, but since then it's picked up again. And who's to say now that that's going to stop here?
Exactly.
Very, very difficult.
Exactly, and that's the same thing with the pound Aussie. It's the same thing with the CAD yen and all this thing. You know, there's no such thing as too expensive and too cheap, because things change. You know, things evolve as we go, and it may look that way because of what we've seen historically, but there's always the, you know, black swan events are black swan events because they are kind of the you know, more random than anything else, and they happen. So knowing that happens tells us that we can't just say this is too high, we're going to start selling here. It's still too early. You know, even though it's overvalued when it comes down to the technical charts, it's still too early to call a short with everything else but the yen. And as you quite rightly say, mate, the charts aren't even telling us that we've got a lower high. You know, on pretty much any metric, you can't sort of be trading a lower high on a 5-minute chart when you're looking at such a huge move on a monthly. It's just foolhardy. So we're waiting for something specific and significant to really change here. Bank of Japan just don't look like they're changing stance. You know, they don't seem keen at all. But they will have at some point. When they do,
if nothing else, they're dogged.
They certainly are, and I guess if the inflation data continues to diminish, which it looks like it is in Japan, then it would beg the question: why would they need now to change? You know, they seem to be sort of quite happy with their policy, and you know, not too concerned about it, except for the fact that eventually that weakness in the yen is really going to negatively affect their economy. It's going to be a bad situation. But I'm hearing all sorts of things. A deflationary recession is due, and all this kind of thing, which it may well be. But the issue we have at this stage is that it's still very much speculation, which it always is, of course. But it's very much in the early stages of speculation. And considering the valuations, it looks to me like we've got some time to let this thing really play out. So there's no reason for us to be going short on everything against the yen right now.
Well, European holidays, we might as well go on holiday, right?
Oh, summer. It was some. Well, this is. Did you know what I was thinking about this? We are into the 7th month in a week's time, half the way through the year. Now, if you look at most charts, you will see that there is a turn in the market that happens at the end of the year, into the start of the new year. Bitcoin, really good example. A NASDAQ, really good example, where these things just tanked right up until December, and then, or at least sort of like into December, November, and then as soon as the new year starts, there's a completely different. Yeah, well, what date was that rally? When did that rally start?
The reversal began on the 1st of the 1st, 2023.
Oh, well, there you go.
New Year's Day.
There you go. There's the NASDAQ. I feel I'm cheating a bit on that one, actually, because that I was hoping you'd have a different chart. I've looked at that already.
We didn't line this up, guys. We really didn't.
Yeah. But you know, so the point is that the time and Phil will probably know a lot more about. Well, of course he will know more about this because I'm guessing that will be a time by degrees number, but the time factor is an element to this. So if we are about to hit the middle of the year, that would suggest that there is potentially a new kind of like way of thinking about what happens in the next quarter and 2 quarters. So we've had 2 quarters where this thing has gone in one direction. Now there are accounts that are going to be sort of like getting ready to change over again, and this could reverse again, and we might actually reverse all the way back down to the bottom.
Interesting. That cycle's complete as well.
Exactly, mate. Exactly. And what was the date of the start of the site of the cycle there?
If that was the 30th of the 6th, no, I won't. I was going to say I'll dance naked on Parliament House. But it was the 27th of March, 2023.
27th of March. So end of a quarter. And this is sort of like, when we're looking at this stuff, we really should be looking in chunks. I know the time by degrees may split it up slightly differently, but if you sort of like think about it in kind of financial terms, the end of the quarter is really important, and that's where we're about to hit, aren't we? We're about to hit an end of a quarter. So this particular time, half year, end of a quarter, and so end of 2 quarters. This particular time is a bit trickier in many respects. To kind of like ascertain what's going to happen. There may well be positioning that people reverse what they're going to do, even though the fundamental data isn't there yet, because what they're waiting for is the fundamental data for the next quarter to suggest that they were correct in their positioning. Earnings season from the United States was solid without being spectacular. It wasn't good. It wasn't bad. AI made the picture a bit more distorted, but when they sort of position for the next quarter, what are they going to be thinking? What are traders going to be thinking? They're going to be thinking we're going to have a quarter as good as last time. That would suggest not, because it's gone so high so fast. So I think that there could be a case for things to be turning around, but it's still a little bit early. I mean, we're still a week away. I mean, I don't know whether that'll make any difference or not, because positioning will start for sure.
Interesting. I hadn't considered that, frankly.
Yeah, well, let's ask Phil. I don't know whether we should do it today, or Thursday, but let's ask Phil about time by degrees in the middle of the year, and the end of a quarter. In fact, Phil, you're on, aren't you, mate? What time by degrees, but at the end of a quarter, anything there or not?
Oh, absolutely. Yep. So I've just sent you a message there, Ash. Generally speaking, without the outlier, without the outliers, is 22nd, 3rd, and 4th time by degrees. Just generally speaking about that time.
Right.
And the 30th, your first or the 30th, is the another one. So that fits in with what you said earlier with the whichever one it was a minute ago.
With the Nasdaq and the yen.
I think you said it. I think you said about the first or something. The start of the year.
So
That's always that. Yeah. That's always that date. Yeah.
Right.
The 29th or the 1st or the 30th. That's generally just without the outliers on the vagaries of the calculation, but very roughly they're the ones. Yep.
Yeah. So we're looking at a situation right now where a lot of products are overbought, and you don't need an indicator to tell you that. You just need to look at the velocity of the move and the price it currently sits at, and which is effectively, I guess, what overbought, how they calculate overbought, oversold. It's probably a bit more technical than that. But are you about to look for the calculation there, Jeff?
No, I'm actually just lost everything. I'm trying to get it back. I'm just preparing for Philip to come and chat to us about his trades.
Oh, cool. Okay. Well, we got a screen that says hubris at the minute, which is yeah. Thank Louis for trying to tell us something.
My apologies. Somebody asked me the definition of hubris the other day, and I couldn't actually put it into words. So therefore, I went to there.
Or did you pretend that you put it into words beautifully eloquently by bringing that website? Oh yeah, Bruce, I can say, oh, give me a moment, just give me a minute, it's coming.
Actually, no.
You were honest.
I'm far more circumspect than that.
Why didn't you just tell them to Google it?
I don't think it was actually a verbal. It would have been an email or something.
Oh, okay.
Maybe, or a Zoom. I don't know. I can't remember where it was, frankly.
Yeah.
But obviously, I was looking up what hubris meant.
See, there was a reference on that, Jeff, to that immoderate greatness, I noticed. That page that was open.
That's on top of my thing. Yeah, there's something for you guys if you hadn't read it. Immoderate greatness. That's thought-provoking, if nothing else. That's a book. You have to purchase it, of course.
No, you can freely download that PDF.
Oh, I didn't say that. Sorry, Paul, about the email you're going
to get. Anyway, mate, that's kind of what we're looking at now. I think the gold chart is also pretty interesting. You know, if you bring all this stuff into play now. Let's have a quick look at gold. That was the 4th. Right. Yeah. Now gold sort of. Well, gold started moving in November. That was kind of that was a low back in November. And then it looks like it front runs it slightly with gold, because that kind of moved it in November, and then it moved it at the start of March. So I don't know. I don't know whether.
Here.
Yeah, exactly. Yeah, exactly. And but you know, gold is looking under pressure, and the way things are right now, I don't think we have the same clarity. You know, King Dollar is not off its perch by any respects, but it's kind of like sitting more in the middle, because we've had a pause now, and we've got Jerome Powell suggesting that there's going to be kind of further rate hikes, and they probably will be further rate hikes. But again, we're sort of waiting for data to kind of match that. Seasonally, as I said, I think I said this already. Seasonally, the strongest currencies are the euro and the CAD, with the weakest being the dollar, actually, and the yen. But I looked at the charts after looking at those, and I thought, how can you trade that? How can you trade that this week? Just tough.
Yeah, real tough. I don't believe the dollar is going to be weak yet. I think it's got plenty left in it, frankly.
Yeah.
And if you're talking, I don't know what that war thing was, that guerrilla.
Oh yeah.
That
yeah.
I don't know what that does, whether that brings confidence into the markets or not. I doubt it. But traditionally the dollar is a flight to safety, as is the yen, as is the Swissy. A lot of people don't remember that the dollar is the thing when things get shitty, and I see that as being the war thing, right? If it is going to escalate or whatever happens, I don't know the ins and outs of it, but if that's the case, then the dollar's got credibility to go higher, in my humble opinion. And we're still in this range. And last time we visited the limits of this range was the bottom, so we're still on our way up to the top, in my opinion. So I still see potential strength in the dollar. Although I think as a reserve currency, its time is limited, and I still think that's the case. In the meantime, that hasn't yet happened. So whilst ever it hasn't happened, it's business as usual. And business as usual says to me that the dollar will rally if there's any strife about the place and any uncertainty and any fear And
yeah,
gee whiz, I can smell a bit of that around the place, I've got to say.
yeah, yeah. I'd agree, mate. I'd agree. The the weakness in the dollar Swiss is to me the most interesting. You know, I quite like the Swissy as a currency. You know, we've sort of heard we've heard their central bank as well come out and say that it's got a likelihood that they'll be raising interest rates again. And because of the uncertainty in the world, I quite like the Swissy. I'm not sure if I trade it against the dollar, but if you kind of look into that flight to safety currency, the Swissy ticks quite a lot of boxes for me.
No problem. Speaking of Swissy, that's on top of Philip's list. Philip, are you able to talk? And if not, let me know because I have to give you powers.
Yeah,
maybe you've got to unmute. There he is. How are you, mate?
Hey, hi. How are you guys?
Yeah, good, buddy. How are you?
Yeah, you're my teacher. You're the one that you're both my teachers here, man. One taught me the wave rider, the other one taught me the slingshot.
Oh, happy to
Great.
be
You must
of
be
assistance.
absolutely. How are you going with them?
Yeah, okay. I'm doing quite all right. Just did my first withdrawal.
Oh, nice, mate.
Mm.
First 10%.
Yeah.
Good job.
No,
Nice.
I got like let me see, 14 or 15%, but I only withdraw 10.
Well done.
Yeah, good
and how
job,
long's
mate.
that been?
Since February till now, end of February,
Wow.
March, April, May, June, 3 months.
Well done. And what is it you're trading? What's the main sort of strategy?
Well, it's mainly is Wave Rider. It's like a cross between Wave Rider and a slingshot.
Brilliant.
Hybrid.
Hybrids, yeah. Well,
I crossed it a little bit here and there. I look at both sides and then I decide on whether I want to do it.
well done, mate. That's really,
Comparative.
really good to
I
hear.
like that. Yeah. Nice.
So
Good stuff.
we got some trade ideas, Phil.
Yeah. Basically, for my case, when I do fundamentals, I do 2 weeks. That means the data for 2 weeks.
Cool.
So I only look at, because I'm a very short term guy. I usually finish the trade within the day, and then I aim for a total of like 1 to 2% a day, 1 to 5% a day. That's the range.
Yeah.
So I just aim for that, and then I do very short. I do short trades that finishes usually during the day. So my fundamental data usually I use is 2 weeks. 2 weeks. That means 2 weeks. 2 weeks wise, what are the data that's coming out 2 weeks, and then I just focus on those 2 weeks. I don't really look at what is before that, because these 2 weeks are the things that will move the price action where I want.
Very true. Very true. Yeah. So the that would suggest that you're trading a shorter term wave rider, not the daily.
4 hours. 4 hours.
4 hours.
4 hours.
Okay, and with the fundamental data, you're are you trying to have an opinion of what the fundamental data is going to be when it comes out, or are you just saying because there's fundamental data coming here, this will give me if this gives me a setup, I will get a move?
Well, mainly is like how to say, I have like what Alexis taught me the last time, which is the 4 main things: the GDP, the CPI, the interest rate, and the unemployment. Yeah. So I just focus on these 4 key data. Yeah. And let's see which one comes out, because it's like 2 weeks ago. The Kiwi posted a GDP of minus 0.1. Mm-hmm. Yeah. So this is the only data that's from the Kiwi, and that's a negative data. So I compare like how many positive data and how many negative data, and I do a cross, like a minus off. So I that would decide whether I want to long that currency or I want to short on that currency.
I love it. And then just look for a setup.
Yeah, and then so for Kiwi, Swiss, well, basically Swiss is the most, like what you said, is the most stable currency at the moment, the most stable economy at the moment, the lowest interest rate, everything's looking up for them. And then last 2 weeks as well, they had like one or two positive results. So yeah, so Swiss is definitely on my long list. And then I had the Kiwi, which is a negative GDP. So I thought of doing the Kiwi Swiss.
Yeah.
So have you found a setup yet, mate? There's the 4-hour chart that we're looking at on Kiwi Swissy.
Yep. So if you look at this 4-hour chart, it's a downtrend. Right, I did put a trend line in, and then there's also a slight uptrend on top, like what you're looking at there. Right now I'm already in the if you look at the daily, if you don't mind, just go to the daily. Okay, you'll see that there's a cross of the EMA with a few high test candles.
EMA, what's that? Extra medical attention.
Jeff doesn't trade EMAs, but yeah.
Yeah. So there's a few cross, but it's also a horizontal level cross as well. So there's a few signals there that's telling me that, and plus my fundamentals that's telling me that, oh, okay, this might be a good one to short. So I went back to the 4 hours, and then I look at the data. It's a bit rangy, like it's a very high move up and down, but yeah, I went in on, let me see, where did I go in? Yep, that high test bar over there.
Hang on a second, I'll get a pen, mate. I'll be 2
let me
ticks.
see, 1, 2, 3, 4, 5, 6, the 7th bar, where it just crosses your trend line.
Yeah.
Yep. So and then engulfing plus that, I went in there.
Short here?
Yeah, I went in around there. So now I'm just waiting for it to go down.
Okay, so you haven't taken any profit or anything like that?
No, not yet. Let me see. Now let me see what's my is roughly positive around 7 pips.
And are you doing a 1-to-1 target, or?
Usually I do is a 1 to 3.
1 to 3.
1
Oh,
to
good.
2
Okay.
or 1 to 2. 1 to 2.
Yeah.
Usually is a 1 to 3. So I'm looking at it to go down. Let me see. Let me just have a look. Sorry, yeah. Give it a little while.
Yeah, I like this. I like this. You know what? If this
Kiwi Swiss. Sorry, yeah. Let me just have a look at it on my end. I see where I'm supposed to end. Yeah, just slightly below, just one more level below the low, the 2 lows that you see.
Below there, right?
Yeah, I'm looking for it to break past, but if it doesn't break past the low, I might close it off there. That should be a 1:1 or 1.5 to 1.
You're looking at this extreme low.
On the 4 hour, there's two lows there. Let me just have Yep. So yeah, I'm looking at this the two lower lows there, the double low.
Yep.
The double bottom.
And then down to there.
I'm looking to close slightly below there. But if let's say it reverses there, I might just close it.
Okay, cool.
Good job, mate. Good job.
And then if you look at it, it's like a trend line. If you look at the shorter trend line, it's a trend line upwards, a break of the long trend line, a retest, and then it's coming down again.
Where's that, mate? Hang on, I'll go a bit tighter.
Yeah, just because I'm going on a shorter trend lines. If you look at the
up here,
then just shift it up a little bit, and then you will see like to the closes. And then that's where it's like it's just crossed that trend line. No, the previous one that you drew, the long one, the big one.
This one, yeah.
Yeah, and then you just angle it a bit higher.
Yep.
Higher.
Using
somewhere around there. Yeah.
Using that, right? Okay. Interesting.
So it broke off, it came back, it retest, and then because I like
here, right?
Yeah.
No, I have to say I'm 100% with you on the direction of this trade. I mean, I just the kind of background stuff is really suggesting some weakness with the Kiwi and the Aussie, and some strength with the Swissy. So I'm 100% with you. There's only one thing that would stop me getting into this, and that is the hourly would be my issue. But it's a timing thing rather than not wanting, you know. But my that around about the daily pivot, if that doesn't cross over the daily pivot, that's going to look really good for downside. But my issue is that it still looks like it could be a higher low. And because of the burst to the upside on the hourly, that would be a problem for me. But that is a slight that is because my taste would suggest that I just need something a bit clearer. Not because I don't like the trade, I do, and I'd actually I'd like to get into this short. And if I was just a bit more loose with you know what I wanted to see, I'd be quite happy to short this and you know put the stops at the highs above the monthly pivot and you know see what would come down. I really like it, mate. I really like it, and that's the only thing that would keep me out of it personally. But that's because I'm trading on the hourly.
Yep. And then if let's say we look at the next one, the pound kiwi. Pound kiwi, as the fundamentals you have already touched about it, and then I've talked about the kiwi, so it is there. And then if you look at the pound kiwi, this is what I'm looking at on the 4 hour. Okay. Yep. So for this one, it's like well, this is a little bit speculative, but on the shorter trend line, it's just bounced off that short trend line there. So I'm looking for it to break through higher.
Okay, these are my trend lines. That is my trend line. There is no other trend line for me. What have you got?
Let's see. A second. Because I'm sorry, if I'm at home, I can share with you my things.
You can? Did you say?
Yeah. Okay. Okay, so basically, if you look at the pound kiwi on the daily itself, but they have just broken past the last high, come back and retest the last high, which is quite some time back. That was
this
like
high?
In March 2022.
Oh, okay.
That's on the daily. So it had just passed it and then came back, and then now it's like drifting above it. It's like February 2020, March 2022. This is the highs that it couldn't break, and now like it's breaking through it, and then it's like staying on top of it. So,
March 2022. Where's that?
It's around on the daily. It's around February to March 2022.
Yeah, I see it, mate. Yeah, I do see it.
And then 2020 as well. That one I think is just around that range.
Yeah.
Which is also around March 2020.
March 2000 on a daily chart, right?
Yeah, on the daily chart. So it's still just within that range, and then this one is like I'm just doing a very short one. So it doesn't
range. Okay, I'm looking for a trade line or a trend line. So you're looking for a range.
You mean? No, this is on the daily. This is on the daily, and then I usually see this on the daily, and then I go to the shorter hours, and then I draw the trend lines, and then I see whether there's an opportunity.
Yeah, I need to show everyone what you're seeing. Where's March 2020 is here, right? Is this the high we're talking about?
Yeah. This is the point that I'm looking for it to go to.
Based on that range, is that right?
Yep.
Interesting.
Okay.
Yeah, interesting. Yeah, similar, isn't it, to the pound Aussie? What we were discussing with the pound Aussie, with that little bit of room it's got left.
Yeah, it's a pinch. So you are long already, Philip? Is that the go?
This one I just went in.
Okay. I'm getting in here. I'm getting in. Okay.
I'm up $10, I think. $10.
Good enough.
I do like. I went in at No. Now I'm up like 50 pips.
50 pips. Beautiful.
Yeah. Yep. I look for the, if you go down to the let's say the 4 hour.
Yep.
Okay. I did something a bit more different, is that I moved forward a few bars. So I went in a bit earlier. Let me see where did I go in. Sorry, yeah.
That's okay.
You're right.
Yeah, let me just have a look at where did I go. I remember there was a low test bar or something like that. Yeah, 2 bars on the daily, 2 bars before.
On the daily,
Yeah.
2 bars before this one. So you saw a low test bar on the daily on this.
Hang on. Let me see whether I'm on the correct chart or not.
So this one, right?
TV, the daily, the last second bar, it was a low test bar.
This one.
Yeah, bounce off the weekly pivot. I see that.
Yeah, and then it bounced off the EMA as well. So I use this as an entry point. So I went in today, but I use this as the.
I like that. I like that concept where you're sort of looking at longer term time frames, and then because if you're the 4 hours actually, it's okay, isn't it?
You've got big kahunas, Philip. That's what I'm saying.
Yep. So
I can't trade into that without taking profit. You're after a bigger prize, aren't you?
Well, basically, it's a bit safety because over on that candle itself, there's some room for it to move. So at least it moves the 1 into 1. Like now, it moved the 1 is to 1. So I actually my stop loss is at entry. So now Brilliant. For this one is I'm just letting it run.
Brilliant.
I think stop loss to entry on a trade like this is perfect, because it looks to me like if that's the low. If it's crossing that level, it's going down. So that looks to me like you've managed to get pip perfect pretty much on your entry on that.
Yeah, your risk is there. That's right.
Yeah.
So now my stop loss has really shifted to the entry point. So this trade is a free trade now. So I just
love it. Love
Good
it.
stuff.
Very cool, mate.
You've chosen the euro to trade against gold rather than the dollar. Why?
Okay, a few things. Basically, euro has always now is like they have just raised their rates, and they're still very hawkish, especially Lagarde. She's like telling the whole world that no, I'm not stopping. No, I'm not stopping. Like, no, I'm not stopping. Let's go. And then and on top of that, if you look at the gold chart, all right, the gold seems to have already peaked at that range there, and it's coming down. It's coming down, and then it's moving down, and then together with the if let's say you compare USD to Euro, I would prefer Euro to be going up rather than USD, because USD, no matter what, they have paused their rates, and then they still dependent on future data. If in the case future data does really like show something, anything, like, because US they have a lot of data, so every day there's data on them. If something comes in, and then the fluctuation for this for that is going to be a bit higher. So I prefer to use euro for the.
So you're long. You're long on the euro and short on gold, right?
Yeah.
Can you bring up the weekly chart for me, Jeff?
Sure thing.
That high. You see that high?
This one?
A trend line. Sorry,
this
if you
one?
get a trend line and go to the high in 2022, March 22. That one there. Yeah. And then bring it down.
Come here, you little sod. Where do you want it to go?
Diagonally down through the last through the high on the, there. Yeah. Now that would suggest there's a little bit of room to the downside for, because that's gold first, isn't it?
Yep.
Yeah, that would suggest there's a little bit of room to the downside for gold.
You're in already, Philip, right?
You might be.
You're in already, Philip?
Sorry?
You're in the trade already, right?
This one, yeah, I'm in this one. I'm a bit down on this one. Yeah, I was in on the 4 hour.
If you and then if you leave that trend line there, and then give us a trend line from the bottom in March 2021 down there, and then sort of like, you know, find as many perfect touches as you can going up.
You mean cheap?
Cheap. There. Yeah, it's about there, isn't it? Look at that. I mean, that is just a...
Yeah, that's a get out level. Yeah.
That's a, yeah, or a buy level. That would be my only issue with it, is that I would be much more interested in the buy side, because we're closer to that buy level than you know, it being a sell level. And it may well have, you know, that cross has already happened just before that price action. So it might be that that trend line has already been on other platforms, has been tested, you know, because the platforms are slightly different. So that would be my only issue with it, is the weekly chart. I'd be not to say that I don't think it's coming down there, because I think it probably could have one more push, but I'd be much more interested in that, and actually keen to look for the long on this one. I know what you're saying about the euro, about Christine Lagarde. However, it's difficult the reason I'd be quite bullish on gold over the longer term is because at some point they're going to have to pause interest rates. And the likelihood is, because they're going to crush the economy, and the likelihood is they won't have beaten inflation. And gold as an inflation hedge then pushes gold back to being quite an interesting product. I don't think it's there yet, to be fair, but I do think that gold is probably something that we should be on our radar for a long rather than a short, according to the fundamentals.
Yep. I do agree with that. The thing is, like I told you, I'm looking for daily trades. That means the day I want to finish it off. So it's like for today, what is the best trade? That's it. So if you look at the 4 hours, Geoff, if you don't mind.
Sure, man.
Yeah, it's a very, like a very pronounced downtrend. It has range, and then it just came down. So I think that there will be like another leg before it starts to move up. Of course, now it's like because of the news last week, it is a bit fluctuating. But I'm looking for it to, how to say, I'm looking for it to go down before it hits the previous resist, the previous horizontal level. That's it. Just that one more leg, and then I'm out of there.
Do you know, mate? I mean, you know, not for me to sort of you know, tell you how to trade, but if you manage to get that short and you manage to get some profit in the short, and you like the long, you may well have a nice situation where you can go short to go long. Yep. Which is where you go short, you're in profit, you put a long position on but leave your short on as a hedge, and then as soon as your long goes up and you can put the stop loss in, then you take your short off and you've got a free trade to the upside.
Exactly. There's sometimes I do that as well.
Yeah.
Sometimes I do that as well when I'm not very sure where it's like going to. I just put one first, and then if let's say it reverses, I look for another the reverse entry, and then I put it there and I cut off the shot.
Yeah, it's nice, decent way to trade. Decent way to trade for sure.
I think that's probably the wrong point. Round about there somewhere. I think the shorts will be wrong at that level.
Oh, for sure. Yeah. They take that out.
So that's my stop loss level. I'm just, if it goes past there, right, then I might not be in it anymore.
Well, I mean, it's cool. You know what? It's one of those, isn't it? And it's never bad to hit a stop loss. That means that you've kind of managed your trade correctly. So if that happens, no big deal. You'll be looking for something else. But it's some interesting picks there. And as I say, I'm with you. This is the only one I'm not with you fundamentally on, but the other ones I'm definitely with you on fundamentally. Price points are tricky for me, you know, in this environment.
This one is a bit risky, yeah.
Well, kind of. I mean, it's,
as long as you're managing that risk, mate, it's okay.
Exactly. It's not risky if you're managing the risk. It's you know, you've got just as much chance of this working out as not. I know it's going towards the stop loss, but that could reverse that trend line, no problem at all, and come right way down again. So yeah, as Jeff said, if you're managing the risk, it's not risky. It's fine. It's it's standard, isn't it? This is trading. So I think
we're at risk all the time. That's what it's all about.
Yeah. Great stuff, mate. Loving that.
Yeah. Do the last one, the oil.
Very quickly, we can do oil. Sure. XTI. I don't know why I haven't got a chart of oil. This, I've got to say, if anybody can tell me how to manage this, what's it called? Market scanner. I must have a chat to Peter, actually, because I've got the market scanner on 14 different charts, and I don't want it on 14 different charts. If you know what I'm talking, because you trade on the market scanner now. So. And I just don't want it there. Okay, that's oil, and you're short
on one of them.
Sorry, mate.
When I open the market scanner, it's usually on one of them only. It doesn't go on all the 14.
Well, if you've got trades on, there it is. There, market scanner's on.
Yeah. If you're on it, and then you just need to reopen.
There it is. There, market scanner's on. Everything I've got a trade on, I've got the market scanner. I don't want it. So it covers everything. Anyway, that's first world problem, right? Right, you've got a triple bottom. You've got a potential high or low, and you're short. Please explain.
Okay, basically, you look at the higher time frame, the daily.
Yep. Hang on, I'll piss this person. I'll cut this.
Yeah.
Phone off. Daily chart. Yep.
What you're looking at here is like a downtrend range, and then now it's like in a range again.
Sure is. So your thoughts are?
So basically, the long term trend is a downtrend. Is a very long term trend from very long ago. I think it's like going down and then ranging and then going down and then ranging. So
no argument.
Yep. And then there's a double top there, and then it comes down, and that's the first retracement, and then now it's coming down. Maybe there will be a retracement on the
double top, retrace,
down, range,
consolidate, down, range, fail break of the high. Yep.
So now there's a lower low. There's a lower low there. Yep. So this
by the skin of your teeth. Yep.
Yeah, just three candles ago. Yep. And then now we go to the 4 hour, and then I'm actually looking for it to go back to the bottom of the range.
Okay.
And this is just like how to say probability. So now with this trend is a downtrend, and then it's how to say, it's ranging within these ranges. And then what I'm looking at is because if you look at that horizontal level, is a very key level that where the daily pivot is. Where the daily pivot, the blue color daily pivot is, there is a very key level that you always bounce off about. It's like it's always bounced in that area.
Here's the daily pivot, right?
In that area. Yeah.
You've actually got a pivot sandwich here. I mean, here I'm going to disagree with your directional bias because all I can see here is a triple bottom and waiting for a higher low. That doesn't mean it will happen, of course, but to trade that's what I would need to see. As far as the short's concerned, if you're playing the pivots, you've got a rejection bar there off the weekly. I get that. As far as reward to risk is concerned, I think it's poor because you're trading straight into the daily pivot. So that would not be a trade I would take. I'd be waiting for that to happen, frankly, and then looking to trade it long. That would be my appraisal of that chart.
Tough one. Yeah, do you know the one thing that I think about oil, which I'm actually with your directional bias, because the one thing that concerns me with oil is that we had the Saudis cut production and oil didn't rally. And if it had any reason to rally, that it was right there. And if we are going to get this global slowdown, that would suggest less oil, so weakness in oil would make sense to me. I am with Jeff when it comes down to the technical picture. I get it. I do get the downside, and I could see it going down without too much question. But there's just a lot in there. I mean, you called it what a pivot sandwich, Jeff. I don't like that. I don't like all the pivots all over the place. It would that's what would put me off. I think with that particular chart. And
so for this one, actually, I have the safety, which is that once it hits the daily pivot, it's a stop loss to entry.
Cool. Yeah. I think that's wise. I think that's really wise. Because actually, you could actually see an inverted head and shoulders kind of happening there on a shorter term time frame as well. So it does look a little bit bullish, but that pivot sandwich is really confusing.
Yeah, very much so.
So it's
and
just
what you tend to find with the pivot sandwich is it'll just go sideways for quite some time.
Yeah.
Perhaps until the fundamental announcement comes along, right?
Yeah.
So for this one, if let's say it hits the pivot and come back, I don't lose anything. If it goes down further, then okay. I'll take it.
yeah, exactly. I think that's a good one. I like your management. You know what? This is the thing, isn't it, with this stuff, is that the trade management means more than the trade itself.
Everything. Yeah.
So your trade management, I think, on these trades is very, very good, and I think you're very wise to do what you're doing. And if it doesn't make you any money, it hasn't lost you any money, which is the most important thing. So I like these. I really like the management of these trades.
And I think that's very much a part of why you're 15% up in the last 3 months.
Yeah,
well done.
Undoubtedly. Good job.
Maybe that's also why I tend to take a bit riskier trades, because I plotted out the plots, that the points that if he hits us this horizontal level, or if he hits these pivots, I will stop loss to entry. And then
I love it, mate. Do you know what? I think that's really sensible, because actually what you're doing is you're making it supposedly risky on the first instance, but then you're shoring it up fast, so your risk just dissipates straight away. So they're not as risky as they appear.
Yeah, and then I can go in on the higher, like the higher, what you say, the earlier entry point.
Yeah, which is brilliant. It's really good. Yeah, I think there's some lessons to be learned there. Thank you so much, mate. I think this has been a really interesting session, and anytime you got trades, let us know. Let's have a good talk through them, because I think your style is something that we can definitely kind of learn from. Everybody can learn from in the room. So you're more than welcome to come back on at any time.
Yeah, sure. If if I'm in the area.
Yeah, if you're around, feel free.
Good on you, Philip. Thank you, mate. Much appreciated.
Yeah, thank you, guys.
Thanks, Philip.
Yeah,
I'm going to need to go, mate, because I've got a builder at my door, and I've got to give him some instructions to do some work for me.
Is your name Bob?
His name isn't. No, his name is. I better remember before I go and see him. It starts with L. I know it starts with L.
Oh, we can't even say yes, we can.
No, we can't.
No, we can't. I like that. When you say Les, no, we can't. We can't delay any longer. All right, mate. Have a good week. We'll catch you on Thursday, right? Nice one. Thanks, guys. Enjoyed the show today. Really good. Good to have a good trading buddy show where somebody else has given us some opinion as well. Brilliant stuff. You bet. Now, Tajul, speaking of people, what's YT? YT is okay. YT, that's a long time ago, and I do understand that. Sorry, Tajul, for getting to you so late. And yes, gold has triggered, and don't I hate it? I absolutely hate it, because we're right on that weekly pivot. However, we will stick by the rules, which are yet to be finalised, but we'll trust that we get a retracement here, or a bit of a pullback, and then go through it the second time. I think that's what is our YouTube. Oh, thank you, Tajul. Thank you, mate. Sorry, acronyms and abbreviations sometimes just go straight over my head. Okay. Anything else from anybody? I think I've made my positions perfectly clear. Long pound CAD, is that right? My God, that's what I hate about this market scandal, because I lose everything. I am something pound CAD, which is out of the money at the moment. I am long gold. That's the gold trade. I'm Euro Swissy short or long, can't remember. That's Euro Swissy. Oh, we're short Euro Swissy, right. We're just out of the money there. And what else is going on? Pound Swissy, waiting for that to trigger, and we're going to cancel out of the gold trade. Righto, we're up to date, I do believe. Okay, let's get out of here. Thank you, folks, for being our trading buddies for the day, and hopefully you've got something out of that. Thanks very much to Philip for sharing his ideas with us, and of course, thank you all for your attention. We will catch you again on Thursday. Have a great week ahead. Bye-bye for now.